Okay, welcome back. 111 points lower on the Nifty. The breadth of the market is pretty, very, very bad actually. Just want to take a look at a couple of stocks which are selling off. Start with Bajaj Finance. I'm pointing out Bajaj Finance because it is actually pulling back. It's back at almost about 3,300. Just a bit of pullback definitely there. It's a thing about 30-35 rupees from the lows. It's already pulled back. Exide Industries should be next. It's down 5%, large volumes. It's at 191. Dish TV is down about 6.5 at about 32 odd rupees. Amara Raja, we'll talk about this with Sonia in a bit. It's down about 5%, 608 odd rupees. And so on and so forth. Long list of stuff which is going down on big volumes today. But let's stick with Amara Raja. And, it's down and out. We'll sort of come to Amara Raja in just a bit. Or do we have Sonia joining us now? Okay, I think Sonia is with us and she takes it away. Sonia.
Well, thanks a lot for that. Both Amara Raja and Exide are under pressure right now. Amara Raja also comes out with its numbers tomorrow. So ahead of that, there is some bit of, a trepidation by the street. However, Anand Rathi has released a note where they say that battery companies like Exide and Amara have once again started a price war. And a price war in a market where to get volumes is so challenging is, I guess, unnecessary at this point. That's the word coming in from Anand Rathi. Anand Rathi says Amara Raja has reduced prices by 6% in the two-wheeler space, in the two-wheeler replacement market across all product categories. Earlier, Exide had initiated a warranty war by extending the warranty by 3 months. Amara Raja followed it up by giving a lifetime warranty. That puts further pressure on their margins as well. And in terms of tomorrow's numbers, when Amara Raja comes out with earnings, Kotak is estimating that the revenues will fall by 2% because demand has been under a lot of pressure. Not just that, there was a 12% decline in the volumes in the auto OEM segment. The industrial segment was still fine, but in the auto OEM segment, there was a 12% decline. However, margins will be held up because of a decline in lead prices. Both stocks have been under a lot of pressure. Exide has hit a fresh 52-week low today. It's down 30% in 2019, and Amara Raja is also down about 20-odd%. So, volumes under pressure this quarter, and now with this extensive price war, perhaps margins could be under further pressure next quarter.
Absolutely. Well, extremely tough pricing situation coming in for both of those stocks. But Sonia, you have a long day ahead of you. So let's start with Reliance Industries.
Well, yes, thanks a lot for that. Ekta, for Reliance Industries, this time is going to be a muted to weak quarter for them. I guess you can see it in the stock. The stock is down about 10% from its 52-week highs. And the key reason for the slowdown, one is the petchem business has been under pressure. Last quarter, the petchem EBIT declined for the first time in 8 quarters. This quarter as well, Nomura forecasts a petchem fall of around 12.7% at 6,960 crores on the EBIT line. That's about petchem. The other thing to watch out for is RelGeo, because after the creation of the InvIT, the payments made to the the tower SPV will be treated as operating costs. Now, these operating costs will look inflated, and that will put pressure on RelGeo's margins as well. Also, subscriber additions have been lower than what we saw last quarter. So, both petchem and RelGeo will be under some pressure. Refining business is fine. It's in fact moderately picked up. $8.50 a barrel is the gross refining margins expected versus $8.2 last quarter around. And retail will also be pretty stable. In fact, in this challenging environment, they've managed to do about a 5% quarter-on-quarter growth in retail revenues. The expectation is around 38,380 crores. But all in all, the consolidated numbers will have some margin weakness and the profits will fall about 5%.
Okay, it's more numbers today, and Indigo reports numbers, Interglobe Aviation reports numbers. Stocks at about 1471, holding on. It's done well, by the way, this week. Sonia, what can we expect?
Well, Prashant, as you know, no one's going to look for the numbers today. It's going to be all about the promoter dispute and whether there are any developments there. On that front, 2 key proposals will be taken up at the board meeting today. One will be the expansion of the board, and 2 will be adding a woman director on the board. Appointing of the woman director on the board. Now, these were the 2 contentious issues that were raised in the allegations as well that was made by the promoter earlier. And the management says that these 2 issues will be deliberated to improve the corporate governance standards. Now, remember, Rakesh Gangwal has been seeking more powers for the audit committee in clearing the related party transactions. So anything on that front will also be watched. And Gangwal could also be questioned by the Indigo board on his allegations of corporate governance by Rahul Bhatia. So that will really dominate mindspace. On the numbers, it will be a blockbuster set of numbers. A, because post-Jet's grounding, the yields have expanded for Indigo. It's been one of the biggest beneficiaries. B, crude has fallen. ATF prices are also going to fall about 1.5% year-on-year, aiding the margins this time. And there will be a big surge in profitability. I guess that's why the stock has been holding up. This year, it's up already about 26% Of course, it came off in the last 1 month because of the promoter dispute.
Okay. Exide, Sonia, thank you very much for that. As Sonia pointed out, I mean, the bigger the two things to watch out for is the promoter dispute and whether Mr. Gangwal gives in to some of the demands of Mr. Bhatia, who wants the board to be expanded amongst other things. But on the numbers themselves, I mean, the numbers doing the rounds is pretty large. Sonia put out the expectations in terms of what brokers are expecting, but it's supposed to be a pretty good quarter. So we'll see how much that matters when the numbers are actually come through. Just a quick look at Maruti as well, which is also picking up. I mean, I highlighted Bajaj Finance, which has recovered about 35-40 rupees from the lows. Maruti has also come up and is continuing to recover a little bit more. It's down 1.25 almost, but 58.17 is where it is at, and that is about 30 odd rupees from the lows as well. Okay, I think Ajay Botke is with us of Prabhudas Lilladhar to discuss how he sees the market panning out. Ajay, thanks very much. Broad pessimism all around, right, Ajay? What is the big factor, according to you, briefly, if you can begin there, which is sort of pushing prices lower the way we are seeing?
I think 3 or 4 issues. A lot of investors had pinned tremendous hopes on some sort of a fiscal boost from the budget. And unfortunately, with the exception of the affordable housing segment, where there have been some source, the attempt made, in my opinion, by the government for moral suasion, where they have asked the PSU banks to bail out the NBFCs, in my opinion, might be a non-starter. Because in India, typically, I think, moral suasion doesn't work. So I think a more radical program like a TARP, which was unveiled by the US government after Lehman crisis, to pick up, I think, the bad assets is something that the government should have thought about in conjunction with RBI. So I think the negativity on the NBFC and HFC front, I think, continues. And I think far more radical measures is what the market is expecting. The other negative, of course, has been discussed ad nauseum on various channels, is the fact that the government has appeared to be slightly callous and insensitive to on the taxation front, insofar as FPIs are concerned, who are basically coming through the trust route. And some relief there would really have helped stem the panic that one is seeing from the FI end in the market. And lastly, I think on the IBC front, one must laud, I think, the alacrity with which the government has acted in terms of trying to reverse some of the very regressive, I think, verdicts that have come from the NCLT tribunal, where secured and unsecured creditors have been put on par. So here you have a peculiar situation where the government is looking to borrow, sovereign borrowing they're expecting from most risk-averse pension funds who typically subscribe. But the vulture funds and the distressed asset buyers, who typically are itching to come and buy into the distressed assets in India, which run into $200 billion, unfortunately will have a trepidation, because they will be treated now on par with the unsecured creditors and suppliers. But it's a very good measure for the government that they have proposed these amendments. And lastly, I think 49% of manufacturing GDP is contributed by auto sector. The sector has tremendous backward and forward linkages. It is an employer of millions of people, including auto ancillaries, and a lot of contract labor, which is unskilled and semi-skilled. And lastly, the sector also has a lot of multiplier impact on other sectors of the economy. And what is the statement that has come from the advisor? I think he, let me complete this. He's basically said that I think if the auto sector is not doing well, so what? Steel is doing well. I think this is the most callous statement that could have come from a senior policymaker. The government needs to come and unveil measures to help the auto sector.
All right, fair enough. That point is taken, Ajay. And, the concerns with regards to the auto sector are also valid. But we've seen two new SUVs come up, MG Hector as well as another one from the Kia stable, and they've seen a really good response. So where is the discrepancy coming?
Yeah, I think these two are products which have been launched, they've just been unveiled. And I think our analyst has sort of, given a very positive response to both these products. I think some 98,000 bookings have happened for the MG and 6,000 for one of the new launches for Hyundai. And I think the pricing there has attracted, in addition to some of the product features. But I think this is just a beginning. I think the kind of sharp drop for the last 8 months, month on month, that the sector has seen, due to confluence of various reasons, I think it does call for tremendous help from the policymakers.
Okay. The other stock which I wanted your thoughts on is actually Talwakers. I don't know if you look at it. The company clarified they do have a high pledge of over 70% in both their listed arms, but separately they clarified that there's no invocation of the pledge shares which has taken place. They are comfortable in terms of servicing debt at this point in time. Do you think that this stock is now the next on the radar to see the kind of punishment a lot of other mid-caps have seen because of, say, concerns on pledge?
Yeah, I think, this is, if you look at the pattern, this is all a part of the heightened risk aversion that one is seeing for the last since January 18 towards small and mid-cap stocks. I think the CNX small cap index I think was at 9,600 levels in January 18, and the last I saw a couple of days back, it is still languishing at 6,000. So at the index level, the CNX small cap index has seen a 3,500 point erosion on a base of 9,600. So that essentially speaks volumes about the kind of massive erosion in wealth that investors have seen in the small and mid cap space. And there are various reasons, we can go into it. It might take a few, half an hour or so. But I think the bottom line basically is that, again, I think we need to look at the internals of the market and not get carried away by the fact that index is down 5% from its peak. That's only the narrow index. The broader index has been ailing. The broader index has been suffering for a very long time. And I think that's basically symptomatic of the pain that has that's there in the broader economy. With all the engines of growth, consumption slowing down, domestic investments not picking up, exports being anemic, the only engine of growth that's working is the government expenditure in roads, railways and power transmission.
Okay, Ajay, it's a pleasure. Thank you very much. Forceful comments coming in from Ajay Bodke at Prabhuda Sriladhar. Lots of worries being highlighted. It's all showing up in prices. And why shouldn't it? 110 lower on the Nifty, 11,490 is where we are at on the index. We will take another quick break here. We'll come back and we focus on more stocks and earnings expectations on the other side.